Good afternoon, everyone. I hope you all can hear me well. Maybe I should just turn up my volume a little bit. Good afternoon, and thank you for joining us once again on our Malaysian Water Association and Malaysian International Water Convention webinar series. Today is our 15th webinar, and we are broadcasting live now on Zoom and YouTube. Our guest speaker today is Encik Sharizan Rosley, Senior Analyst, CGS CIMB Research. Encik Sharizan will be speaking on turning the tap on water capex and water tariff, a review of water sector drivers. So if you have any questions for our speaker, you can key in your questions. The Q&A icon is at the bottom of your screen. Now, Henry, is Dato in already?
Yes, I'm in.
Hi, Dato. So to all our attendees, now I want to invite Dato Engineer Abdul Kadir bin Mohammadin, President of the Malaysian Water Association, to say a few words before our speaker comes live. Dato, over to you.
Okay, thank you, Dennis. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi. Ladies and gentlemen, thank you again for those who have been following up our weekly webinar. And this is our 15th. In the last 14 webinar, we have completed a great coverage of topics in the water supply, water resources, and sewage services, ranging from all the technical aspects, the smart technology, innovation, legal and operational issues, and not to forget the COVID-19. So today, the webinar presentation will give another interesting topic of the day, and the one that we've been experiencing most, quite sensitive topic, but it's very good to share. And it will give you the opportunity to move into the funding and financing of water, one of the most important factors that relates to water industry. So as you are aware, the topic, turning the tap on water capex and water tariff, a review of water sector drivers. And this webinar will touch on two important hurdles faced by the water industry in its water transformation journey that was started more than a decade ago, and the funding challenge and the backlog of water infrastructure spending. It will be presented by our Encik Sharizan Rosley, the Senior Analyst from CGS CIMB Research. I'm sure you're going to find this talk by Encik Rosley, Sharizan Rosley, will be very interesting and very informative. He has done very extensive research and very comprehensive analysis on these two subjects in April 2019. So thank you, Encik Sharizan, for spending the time with our industry people today. So with the post-COVID-19 pandemic slowing down and with the 12th Nation Plan 2021-25 ready to roll out next year, spending on water infrastructure is expected to pick up soon, especially with the need to attend to increasing aging assets that must be replaced and backlog of new capex spending in all states for over the last 10 years. Notwithstanding that, the above perennial issues remain, and issues such as the threats to intermediate and long-term water security and sustainability brought about by, among others, the low national average water reserve margins of 12.7%, the healthy levels 15 to 20% is the best that you should get for the reserve margin, and not to forget our NRW of 33.9% for financial measure, which remain unresolved. So in reality, water capex funding and water tariff are characterized by being in a close of interdependent relationship. In this regard, some of the points Encik Sharizan Rosley will share with us include review of water sector's drivers, operating conditions of water operators and the need of full cost recovery, water infrastructure capex backlog, past plans and the crucial areas of focus, and lastly, various downstream and upstream water players which may benefit from the restructuring and recovery of water sector drivers. Ladies and gentlemen, this afternoon, MWA would like to take this opportunity to share our perspective on the water tariff in relation to capex funding in today's webinar. Politically unpopular, the increase in water tariff has been a long-standing impasse between federal and state water regulators, and in relation to Capex funding and water tariff is viewed as important step in enabling water infrastructure investment. High water tariffs are required to balance our operating budgets to create a self-sustaining water and sewerage services industry. Further to this, it is our view that PAB negotiation with the states yet to migrate their water assets to the agency should be expedited. We also believe that the government should provide more education to the public on why water tariffs ought to be increased, and it is in the consumer's best interest to know all these facts. And in fact, the impact of higher tariffs on public's water bill can be cushioned by them using water more wisely. Furthermore, on the part of the government, it has to have the political will to raise tariffs which has been lagging behind the rate of inflation. Water tariff hikes are inevitable as the water industry is in dire need for new capex to ensure long-term supply sustainability. We believe an increase in water tariff is long overdue, especially in states that have yet to have a review for many years. The case for higher water tariffs is needed in states where operating expenditure exceeds operating revenue. For example, water tariffs have not been reviewed in Pahang for the past 30 years, possibly one of the reasons behind the state's operating deficit. Higher tariffs should also aid the state water operators to achieve cost recovery in the long run, which is one of the key aims of water industry reforms. Increases in water tariffs will allow for higher lease payments by the water state operators to PAB, which is tasked to fund the Capex requirements. A strong cash flow and balance sheet should allow PAB to secure more financing, which can then be redeployed as Capex. The flow of financing and investment that contribute to water security and sustainable growth. Besides PAB, we understand the federal and state governments still provide some funds to the state water utilities for certain projects. Unfortunately, in our case, capital is rarely allocated based on a rigorous cost-benefit analysis. Instead, allocation is more likely to be driven by political or equity considerations. In contrast to the limited investment in water, we have seen very extensive investment in power. The key difference is that power is generally a central government sector with a central government off-taker and associated guarantees. Water services provision is typically a state government affair, which means that the credit profile is normally low and the utilities and their projects are considered unbankable by some. Over and above this, cost recovery in power is generally better than water. It follows that vigorous policy reform and redesigning of the management framework of utilities to enable flow of investment is an imperative for efficient and sustainable development of water service industry. We believe utilities with sustainable cash flow will find it much easier to draw investment from all sources for expanding services. The fundamental success factor is setting and then getting the right price to deliver a service with full cost recovery as the goal. Appropriate pricing policy stabilizes approaches to long-term investment and drives conservation in water consumption. The key step is to determine the actual cost of water services and mobilize the necessary support for implementing cost recovery over a staged and considered time frame. In closing, we would like to reiterate that financial sustainability of our water companies has been hampered by low tariffs. Local political consideration often prevent the timely application of tariff adjustment. However, we at MWA, we strive to convince all stakeholders that change is possible and feasible. MWA will continue to explore and identify innovative ideas, suggestions to remove barriers and propose incentives to foster truly sustainable water infrastructure investment and management. However, we need our federal, state and regulators and local partner NGOs to commit to the hard work ahead. Finally, a big thank to our presenter today, Encik Sarizan Rosli for taking his time off, coming to share with us this interesting topic, and also not to forget our host, webinar host, Protem Group. And I wish all of us to have a successful and fruitful webinar today. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Dato'. So before I invite Mr. Sharizan to start the presentation, let us watch a short video on CIMB.
CGS-CIMB is a leading integrated financial service provider in Asia. Through our network of local offices in Malaysia, Indonesia, Singapore, Thailand, branches and strategic partners, we have a global presence in over 20 countries, providing a truly Asian perspective. Our businesses include retail broking, institutional equities, derivatives, prime services, equities research, wealth management, and online broking. We also offer a range of Islamic services, such as Islamic stockbroking window, Islamic cross-border trading, Islamic securities selling and buying negotiated transaction. Backed by an award-winning research team, we have one of the most comprehensive research coverage of over 800 stocks in the region. Our strong research capabilities form the backbone of our product and service offerings, connecting clients to opportunities. CGS-CIMB, your financial gateway to Asia.
And before we start, I would just like our attendees to know that halfway through the presentation, we will conduct a very short survey. So we'd like you to participate in our short survey. So now I would like to invite Sharizan Rosli to address us.
Thank you very much, Denise. And also, before we begin, a warm appreciation and thank you to Malaysia Water Association for inviting me to represent CGS-CIMB on our views on the water sector. Also would like to thank Dato' Abdul Kadir for the introduction pursuant to this discussion. So to kick things off, my name is Sharizan Rosli. I'm a senior analyst at CGS-CIMB Securities research team. I have been an observer of the water sector over the last more than 10 years. And we believe that discussing this topic today will probably be an opportune time for the industry to relook at what are the key drivers, what are the gaps, and what are the possible targets that the industry players and or policymakers may want to consider going into next year and ahead of the 12th Malaysia Plan, which will begin in 2021. Let me share my slide first. Okay. Before we begin this presentation, I'd like to bring us through some prelude points that brings us through this presentation to enable us to appreciate more in terms of the key points to be delivered throughout the slide presentation. Number one, for the Malaysian water sector, for investors or market observers or industry players to appreciate the challenges and hurdles is that the transition of the Malaysian water sector from a concession-based to deprivatization to the migration of the asset-light model and also to where things are in terms of state operators took more than 10 years since 2008. It has been quite a challenging journey. Secondly, as an industry observer and also a sector specialist, we've seen some challenging periods where some of the state water operators in converting into the migrated asset-light model, such as Selangor, which has actually concluded its acquisition and transfer to the asset-light model to PAB, is now rolling out future plans in terms of improving its water services, both production and distribution. Fourthly, I mean, the key issues for the sector remains from 2008 till today, which are the issues that WSIA 2006 aims to resolve and streamline. These includes high water tariff, high operating cost, high NRW levels, high funding costs as experienced by water operators prior to the transfer to the asset-light model, and also going forward, increasingly higher capital investments needed to improve the quality of water services. So why is this topic today relevant? This topic today is still relevant because post GE14 in 2018, the government at the time were picking up its momentum or speed in terms of reviving the water sector drivers, pushing for an acceleration of the migration of state water operators to the licensing model, and also planning for future water Capex through PAB. So this presentation, topic of which is turning the tap on the water Capex and water tariff, is an overall review of water sector drivers related to the water sector report, which we published in 2019. So let's move on to the presentation. So this presentation, ladies and gentlemen, will cover a few things. Number one, we will briefly look at the overall sector view. We will look at the structural transformation, which is long overdue. We will also look at the breakdown of the RM77 billion backlog of water Capex that was largely announced in press and other mediums driven by SPAN and PAB in terms of what were the water Capex plans in 2019, which we believe have not been rolled out in a big way. We will also look at the new operating model under WSIA. We will also look at comparing the profitable and loss-making state water operators as per the data published by MWIG in 2018. Some of the key important topics which will be covered, including sustaining the full cost recovery, water Capex plans, both federal and state level. And we will also closely look into the players in the water industry, both the distribution, production, supply chain, and whom should be the beneficiaries of this potential restoration and revival of sector drivers should things pan out positively into next year. So in terms of overall sector view, in our view, there are three key themes to drive sector reform from 2021. Number one is the recalibration of water infrastructure Capex plans by water operators already under the licensing model and Capex plans by direct federal government state allocation. So based on our compilation back in 2019, which I will touch on in further detail in other slides, there is an outstanding 77 billion total long-term plans needed to revive or review the water infrastructure Capex plans over several years beyond 10 years from now. The second theme is WSIA 2006. WSIA is, as we would all know, is the Water Services Industry Act, under which all the reformation and also the reform changes of the sector is governed under. We believe from next year, the resumption of the migration of state water operators to the asset-light model should continue to accelerate or move in a faster pace for Kedah, Pang, and Terengganu, and also Perlis. And finally, the formulation and implementation of the water tariff setting mechanism, which is long overdue. Recall that in 2019, it was initially targeted to be launched in April. It was delayed in end 2019 and has since rather been a politically unresolved matter, which we believe should be looked into going into next year. Now, the structural transformation for the water sector is long overdue. And the end game for the water sector, in our opinion, revolves around three things: the full implementation of the sale and leaseback model, moving from concession to a licensing regime. This should enable PAB and also SPAN to better coordinate and fund water capex in the pipeline and regulate operational KPIs for states that have migrated to the licensing regime. And secondly, is to execute a better strategy for water infrastructure rollout without major delays as a result of funding issues in the past. Based on our study in 2019, there were still substantial water capex plans remain outstanding for water treatment plants, non-revenue water, pipe replacement, and also interstate water transfers. And thirdly, is ultimately to be able to broadly raise the revenue level of water operators via a periodic tariff increase, which we believe should not be a huge burden to consumers, and ultimately resolving the operating deficit issue or losses faced by some water operators, and commence the asset lease payments to PAB to allow PAB to better streamline their water capex plans over the longer term, if not starting from next year. Now let's look at the 77 billion widely talked about backlog of water capex that was widely reported in 2019. As an industry observer, it is usually quite difficult to get official data. But in 2019, we were lucky because there were several news talking about the potential revival of water capex plans. And in this slide, you would see a compilation of the several components of the 77 billion. If you look at the figure 77 billion in the table, water capex covers upstream, which includes raw water source and water treatment and production, and also downstream, which covers reservoir, pumping stations, distribution pipeline, and aging or old pipes. At the time, capital investment capex for the water sector, if viewed over the longer term and on a bigger scale, would amount to 77 billion ringgit estimated, according to PAAP and SPAN in 2019. And in terms of breakdown, about 70% of the 77 billion should or would be targeted for nationwide water resource and supply systems, new sources of water that involve the construction of dams, off-river storage, and new water treatment plants. These are broad plans which believe until today have not been able to be executed properly due to the limitations of funding and also the backlog of the hurdles caused by the delay in the tariff setting mechanism. So I will touch on that later. So the balance 77 billion, 30% should be targeted for pipe replacement works, especially asbestos cement pipes, spanning over 40,000 kilometers nationwide. Now, if you look at the history of the water sector and how water infrastructure capex has been rolled out, it was split into two areas. One is direct federal government funding or grant, and the other one is coming from the capex rollout by PAAP since 2008. So if you look at slide number 10, which is this slide, you can see that the direct government allocations or grants for water infrastructure has been rather lumpy. And based on our compilation, on every budget announcement since 2010, the level of budget allocation for water and also electricity supply ranges between 1 billion to 3.3 billion per annum. And you could see that in 2019, the compiled allocation dropped significantly to less than 1 billion ringgit, and it came up, increased to about 1.8 billion as per budget 2020. So at this juncture, we believe there could be more focus on water infrastructure allocation from the government. But essentially, we think for a further boost to water infrastructure capex, the plans under PAAP and SPAN should also come on stream. And at the end of the day, it also is a function of the ability of PAAP to fund those capex via sustainable and higher lease payments from the water operators via the tariff setting mechanism. So in 2008, the higher than average spending on water infra budget, you could see about 3.1 billion was due to a significant proportion of being allocated to the building of new water treatment plants in certain states that has yet to migrate to the licensing model. Now let's look at the new operating model under WSIA 2006 and how it links to tariff hikes. So this is a structure of which the new operating model under WSIA functions. The government at the top being the policy maker with the SPAN, the National Water Services Commission, as the regulator, regulating and improving KPIs for the water operators on the right here, which pays the leased water assets to PAAP, which have acquired their water assets prior to the migration. And the lease payments that PAAP receives from the water operators under the new model, it serves as revenue to PAAP and cash flow accretive to PAAP to raise funds to fund future water Capex plans. And consumers are down here. So this is where the concern at the end of the day. For the water operators to be able to pay additional lease payments to PAAP in relation to the water assets, they should be able to have a sufficient revenue level via water tariff hikes, periodically raised between 2 or 3 years, which would sustain PAAP's plan for water Capex over a longer term rather than short to medium term. So if you look at slide number 13, the link between those two components is that the level of value of future water Capex rollout approved by SPAN, the regulator, and implemented by PAAP, hinges on the ability of the state water operators to incur additional lease rental payments associated with the value of Capex spent and committed by PAAP. Essentially, the quantum of approved water tariff increases for migrated states in the past has been tied to, among other KPIs, the value of water Capex by PAAP. The water Capex, which is financed by bonds, suku raised by PAAP, is translated into annual lease payments payable by water operators to PAAP itself, and they recognize lease payments as revenue over a specified operating period unique to each state water operator. So this example is already has a working example in the industry today. States like Johor and Perak, which have migrated to the licensing regime and asset-light model, have been benefiting from periodic tariff increases over the last couple of years. And the latest development being Selangor, which has completed its asset migration, is expected rather to kick off with a tariff hike sometime from 2021, although we at the moment do not know what is the timeline and what is the position of the government in allowing for a tariff increase by Selangor, which we believe is very, very long overdue because of the operating deficit faced by Selangor water operator over the last couple of years prior to the migration. And once a new water tariff is approved and committed to be implemented, PAB will initiate the tender and award phases typically over a 3-year period before the next KPI and water tariff review by SPAN. So this is actually the component that, if you will, stagnated or stuck due to the delay in the migration of other states into the asset-light model, and also the delay or slow progress of the eventual need for a tariff setting mechanism for the entire sector. Okay, let's move on to the next section, which we will look at comparing the profitable and loss-making state water operators. Based on the data published by MWIG in 2018 for 2017 figure stats, Perak, Negeri Sembilan, Melaka, Johor, Kelantan, Perlis, Penang, and Selangor have restructured and migrated their operations to the licensing sale-leaseback model with scheduled tariff hikes. Selangor, being the largest water operator by revenue and also by production capacity, have yet to come up with an agreement with SPAN, PAAP, and the government in terms of rolling out or kicking off their first operating period with tariff hikes. If you look at the chart below, of the 10 profitable state operators, only 2 are listed, which are PBA Holdings for Penang, Randhill Utilities for Johor, and not so distant is Taliworks in Selangor, but Taliworks is a listed company that is operating the O&M for the water treatment production, not the distribution. So we foresee better visibility of water infrastructure Capex for state operators that have migrated to the new operating model. And this may be a focus in 2021 for the government to accelerate some of the water sector drivers over the next few years. Now let's look at the loss-making state operators. Based on the data published by MWIG, the most crucial state in terms of having revenue significantly less than its total expenditure in Selangor is Selangor. In 2017, Selangor recorded a revenue of 2.1 billion as at end 2017, but also reported an operating loss of 1.8 billion, which was prior to the acquisition and restructuring of Splash. So intuitively, if you look into the prospects of water tariff hike, we believe Selangor would be in the best position to receive special attention in terms of what would be the outlook of water tariff hike for the state in order for the state to achieve a full cost recovery model. So if you look at among the states in 2017, the reported losses, Selangor ranks the highest in terms of operating deficit with a total expenditure to revenue ratio, which is actually a ratio that we use to indicate efficiency of about 188% in 2017. And its total revenue of 2.1 billion, like I said earlier, is the highest in the country with a calculated market share of about 36%. Now let's talk about the full cost recovery model and the need for tariff hikes. Using the operating cost revenue ratio as an indicator of operational efficiency, several state water operators in 2017, including Selangor, stand out with ratios between 124% and a staggering 170% as an end 2017. So the ongoing full cost recovery agenda by state water operators points to one, the continued need for water tariff increases to support infra spending financed by PAAP. Second, steady increases in the value of water Capex approved by SPAN. And third, accelerated non-revenue water and pipe replacement initiative to better manage water loss. So if you look at the chart below, some states were already operating at below the national average efficiency ratios, such as Johor, Perak, Pulau Pinang, Malacca, Sarawak, Terengganu, Negeri Sembilan, and Labuan, and some states which are barely fit the bill was Kedah, and those with very high, relatively higher efficiency ratios include Selangor, Perlis, Sabah, and also Pahang, which has the highest score of 170% as per end 2017 figures. So we don't believe, we think this ratio levels did not change dramatically for 2018 figures, and we think this will probably be the trend going forward unless a sustainable tariff setting mechanism can be in place to help some water operators achieve a sustainable full cost recovery. Okay, let's talk about water tariff. First of all, I think most of us appreciate the fact that the average water tariff for Malaysia is probably among the lowest in Southeast Asia, or perhaps the lowest in Southeast Asia. The last time that water tariff was hiked was about 12 to 35 years ago. And the average water tariff rates across all 14 states in Malaysia range between 78 cents per cubic meter and 2 ringgit and 20 cents per cubic meter. And the last water tariff increase was seen in 2015 for states like Sabah, Penang, Negeri Sembilan, and also Labuan. Now, among the migrated state operators, which are those that's under the regime of WSIA 2016 and those that have transferred, allowed PAAP to acquire the asset and novated their water loans to PAAP, water tariffs in Kelantan, Perak, Terengganu, and Perlis are about 11 to 33% lower than the national average, while the average water tariff rates for Negeri Sembilan, Johor, and Malacca are about 11 to 56% higher than the national average. The national average at the time was 1.25 ringgit per cubic meter. So if you go through the table below, you can see that states like Pahang, Sarawak, Perlis, Terengganu, Perak, and Selangor did not hike their tariffs since the last 12 to 35 years. And as Datuk Kadir rightly pointed out, Pahang is probably the longest standing state without a tariff hike since 1983. And the most recent states that we saw with a tariff hike was Sabah, Penang, Negeri Sembilan, and Labuan, and also Johor in 2015. Now let's talk about the new water policy and the TSM. Now the tariff setting mechanism is probably the final component of the overall restructuring of the water services industry. This is one of the 4 components, and this being the final one that will probably launch a new water Capex plan and also more visibility in terms of the government's position in rolling out water infrastructure Capex and also sustaining the operations of each state water operators. So for the TSM, the formulation of the and implementation of the TSM was initially targeted in 2019. It has been delayed to end 2019 and has since become an unresolved or rather politically fraught matter. Formulation of the TSM could kick off a more transparent and structured mechanism for future water tariff hikes, which theoretically will be sufficient to cover operating costs and lease payments. According to SPAN at the time, the setting of the water tariff takes into account 3 main components: water treatment, water distribution, and also raw water resources as part of the key cost to cover. And as said before, the TSM is probably the most sought after development of the water sector viewed by various industry observers and also industry players. So in terms of what our expectations are, we think that the government may be looking into deciding on whether the TSM is a viable decision or should the TSM be further delayed. So recent news flow politically indicated that they might not be, but we'll let's just let that news settle until further confirmation is forthcoming. So slide 21, we've actually done up a summary of the operating statistics of water operators in each state. If you could see, as per end 2017, the most profitable water operator was Perak, with about implied 94 million in profits as per end 2017 figures over here. You will also see that as per end 2017 data, Pahang, Perlis, Sabah, and Selangor were loss-making, and the biggest operating deficit was Selangor at the time. So in terms of the definition of operating expenditure, it covers cost of raw water, cost of water treatment, distribution costs, customer service costs, and also admin and general costs. So if you look at this column here, it describes the OPEX levels of each of the state water operators at the time. So the highest being Selangor at 2.6 billion ringgit, and also the lowest at the time being Labuan at 26 million ringgit. So in terms of cost for water operation, it does not only cover OPEX, it also covers expenditures, and these expenditures includes depreciation, amortization, interest expense, and also impairment. And the lease payment is the component that relates to the lease payment due to PAAP paid by water operators once they have migrated to the licensing regime. So if you look at the total expenditure column for the states, this right here, you could see that Johor's total expenditure amounted to about 1 billion ringgit for 2017. So this would include the lease payments that they have been paying to PAAP ever since they migrated to the new operating model. And for other states like Selangor, its total expenditure amount was the highest at about 3.9 billion ringgit. And this component have not included the lease payments to PAAP. So in terms of Selangor's operation, we foresee it going into continued cost-cutting measures, especially for its production side, production segment, and also to continue to manage the cost of raw water and also water treatment costs over the longer term, once that they have already completed the migration process. Now let's talk about NRW and revenue loss. So NRW is non-revenue water. And also,
we do a poll now.
Oh yeah, Denise. Yeah.
Okay, sorry for interrupting you.
Mind that, yeah.
So before you talk about NRW, so I think we'll just pull up our polls now with the 3 short questions. And we'd like all our attendees to kindly help us to answer these questions. We'll give you a bit more time because I think the questions are a little long. Henny, has everybody answered? Do we have results already? Okay, then here we are. So you can scroll down your screen to see the
You can see answer already.
Yes.
Should I read out the poll? No.
No need.
Okay.
It's okay. I think everybody can view from here. Okay, so before we continue with the presentation, I'd like to put a video on for our attendees as we would like to promote Sarawak. Thanks, Henry, for putting the video for us. I can't wait to travel. I don't know about you. So, Sharizan, you may continue.
Okay, thanks, Denise.
Okay.
Can you see my slides? Okay, let me just.
You need to share your screen again.
Yeah, I'll share it again. Okay. Ladies and gentlemen, welcome back from the intermission and polls. Thank you for answering your feedback, give your feedback on the polls. So we'll continue this session with NRW levels and revenue loss. Where does Malaysia stand in terms of NRW? NRW is defined as the portion of water volume within the distribution system not accounted for or lost due to faulty water meters, illegal tapping and leakage brought about by aging or old pipes. So Malaysia's NRW stood at about 35.7% as at end 2018, with an overall projection of hitting 25% by 2025. Regionally, Malaysia ranks top 10 in terms of the highest NRW levels. According to data compiled by SPAN, the countries with the lowest NRW, which is below 10%, during that year include Singapore, Denmark, Netherlands, and also Germany and Japan. So Malaysia, in terms of NRW targets, we do still have a long way to go. But in terms of whether we have been reducing NRW average nationwide since the last couple of years ago, you look at the slide. As at 2019, it shows the 10-year NRW trends. As at 2019, the nationwide average NRW levels was about 33%, compared to the average 35.7% recorded in 2018. So which is a minor decline, but still a decline nonetheless. And going over for the next couple of years, or at least the next 5 to 10 years, Malaysia's NRW target remains at 25% by 2030. So this implies that capital investments for NRW reduction, to resolve leakages, to improve the rate of water loss through the distribution system, should continue to be a target for PAAP or SPAN or the government to focus on, especially on the fact that the asbestos cement pipes, which account for about a third of the 49,000 over kilometer of pipes in Malaysia, is still due for replacement. And the market was expecting an acceleration rather of the spending on NRW in 2019, but that did not happen in a big way. And this is also one of the key drivers of water Capex likely going into 2021 and probably throughout the period of the 12th Malaysia Plan. So now let's look at past water Capex plans, PAAP driven and also federal and state government initiatives. So how Capex plans between PAAP and SPAN is rolled out. We did a study or a comparison to understand how PAAP rolls out and SPAN approves Capex plans. So in 2019, we discovered that of the total 2.8 billion approved Capex by SPAN in OP4, OP is operating period. Operating period refers to the clusters of 3 years that migrated state water operators operate in. So, for example, when Selangor completed its migration process, it will start with OP1. OP1, for example, starts in 2021, ends in 2022, and at the end of year 2022, there will be a scheduled tariff hike agreed upon, approved, and also made available for the state of Selangor. So, and this goes for other states as well, and also states that have already existingly migrated to the new operating model, such as Perak and also Johor. So, based on our tabulation, of the total 2.8 billion approved Capex by SPAN in OP4, which covers year 2018 to 2022, 38% has been earmarked for pipe replacement and rehabilitation. 28% for new WTPs, being water treatment plants, and 24% for new distribution network and reservoir, while the balance, a smaller proportion, has been approved for smaller scale contracts. So that was in 2019. And also, of the total 330 million total Capex planned by PUB in OP4, which is the same period of 2018 to 2022, pipe replacement and rehabilitation works took up the lion's share of about 65%, or about 215 million, but were equivalent to only 20% of the total Capex for pipes by SPAN for OP4, which is the same period. So most of the water Capex spending and plans approved and roll out, approved by SPAN and also rolled out by PUB, cover several key components: the water treatment plant, repair and upgrade of water treatment plant, new distribution network, pipe replacement, which also relates to new replacement of old pipes, residue management, non-revenue water program, and also unplanned Capex. So next slide is slide 27. So in terms of Capex focus, when we published the report in 2019, we concluded that pipe replacement from that year continued to be the main focus for PUB. And the focus for PUB resides on three main segments. Number one is water treatment plant, new distribution network, and also replacement and rehabilitation of old pipes. The more critical issue in our view is the replacement of old asbestos pipe, which in turn, if executed in a more sustainable manner, could contribute hugely to the reduction in NRW or water loss. So your question in your mind would be, okay, so what has the government done in terms of rolling out big, large-scale infrastructure projects? So we look at this project called Langat 2. It's a water treatment plant, touted to be the biggest in Southeast Asia. And we had the chance to visit the facility in 2019. And as at that time, the development of the Langat 2 scheme was distributed across 19 total packages. And Langat 2 scheme was the largest package in terms of size and value. And then Langat 2 water treatment plant has a design capacity, phase 1 has a design capacity of 130 MLD and was awarded to a consortium, Salcon MMC Ahmad Zaki JV in 2014 with a total value of 994 million. According to the plans by Air Selangor back in 2019, Langat 2 phase 1 was planned to come on stream with its initial treated water supply capacity of 325 MLD, or about 29% of its total design capacity for phase 1. At this juncture, after 1.5 or 2 years, there has been still lack of clarity in terms of what are the government's plans for the implementation timeline for Langat 2 phase 2 going forward. In 2019, we've also compiled some of the key projects that both the federal government and states have planned. In budget 2019, we have tabulated a total value of about 8 billion in terms of water Capex plan over the longer term. The state of Sarawak and Johor have launched more aggressive multi-year Capex programs for both water distribution. And I think Sarawak's water infrastructure plans could be covered in the next webinar. For Johor, they've also launched the Johor NRW reduction program valued at 3.4 billion. And some other states, like the state of Perak, has a 3-year water Capex plan between 2019 and 2021, mainly for the water supply, and also for the state of Selangor. At the time, they were executing a development of water infrastructure for the construction of Labuhan Dagang and water treatment plant. And we expect slightly higher water Capex plan for Selangor going into 2021. Now, if you look at the scenario of the water sector today, should the two main water sector drivers come through, underpinned by a tariff setting mechanism. So water capex and water and also the tariff comes into fruition. The overall sector, in terms of a broad-based view, should benefit. So in this presentation, we also highlight some of the players, companies in the water sector, and how they are positioned in the entire supply chain, and whom would likely benefit in terms of overall basis if the sector's reform, rollout of water capex, and tariff mechanism comes into play in a more sustainable manner over the next few years. So some of the companies we've highlighted are the infrastructure ownership companies for upstream and operations and suppliers. If you look closely in the table below, in the table on the side, and this also includes downstream operations and suppliers. Consultant engineers that work closely with asset owners, federal government and state governments for water infra planning, and also engineering consultant services, such as HSS engineers, which is probably the largest infra and water consultant engineer in the country at the moment. O&M companies for distribution and production, such as Renthill Utilities. Renthill has actually changed their name from Renthill Berhad to Renthill Utilities. PBA Holdings for Penang, Taliworks, and also Gamuda Water, which is 80% owned by Gamuda. So these names are listed companies under the O&M segment. Also not to forget the pipe manufacturers and suppliers of small to large diameter pipes, whom, based on our context with them, has been waiting for a more steady rollout of pipe tenders, pipe replacements since post GE14 in 2018. So some of the players we mentioned in the table includes Entex, YLI, Kiaptek, JAX to an extent, and also Fitters Diversified, which is relatively a new player in the pipe manufacturing space. Also, water meter manufacturers and suppliers such as Georgechem, also water chemical supplier within its subsidiaries include Kumpulan Perangsang, and water treatment plant contractors such as Selcon. So at the end of the day, the way we see the sector here is that unless the two key sector drivers, which are water capex and water tariff, comes into a clearer and also more sustainable plan in terms of execution, we are expecting, still delays likely for water capex rollout, and also delays likely for the achievement of a full cost recovery model for all water players in the country. So these are the two key challenges that the industry currently face and could continue to face if things are not resolved in a timely over the next 1 or 2 years. So in terms of summary and key takeaways, I will summarize here the challenges and catalysts for reform for the overall water sector. Number one is the recalibration of water infrastructure capex plans. So we are looking to monitor what are the key policy changes or highlights for the infrastructure overall, and also the water sector for budget 2021 and also the 12th Malaysia Plan. Budget 2021 will probably be announced sometime in October or November, and then the 12th Malaysia Plan will come out sometime in the earlier part of 2021. Secondly is the completion of water asset migration under WSIA 2016. So this refers to PAAP and SPAN and the affected state water operators. Thirdly is the resumption of water capex plans by PAB and approved by SPAN. So we are expecting more visibility on the implementation plans for water capex backlog. Number four is probably an important, rather sensitive side of the catalyst or challenges is the political buy-in for the commercial and economic needs of the TSM. So priorities for states with high level of operating deficit and high Capex requirements are the ones that should be in focus to allow them to gradually or sustainably achieve a full cost recovery model over the longer term. And finally is the actual implementation of the tariff setting mechanism, which I think we all believe is the million-dollar question of the day, and the final component of the overall water sector reform. So with this, I will end the presentation, and we will probably move into the Q&A session, Henry.
Thank you very much, Shenzan. So before we move into Q&A, I would like to announce that the Malaysian Water Association it has launched the Malaysian Water Industry Status and Outlook Report. So maybe just have a look at the announcement. So it's now available for the water industry players to order this report. Thank you very much. So if you're interested in this report, you can order from the Malaysian Water Association. Somebody asked, how much is the report? I'm not very clear on the cost of the report here. Maybe later Mr. Lee can enlighten us. So we're going to start our Q&A session. Sherizan, you can have a look at the Q&A icon at the top.
Yes, I am.
And there are three questions.
Right. Yeah. Okay, there have three questions here. Number one is, does the TSM consider non-revenue water, such as reducing the tariff increase if the NRW is too high? At this juncture, the answer is possible. There are many components of the TSM framework that is still not out in the open, and the government has yet to come up with a feasible or viable TSM framework, which would allow water operators to enjoy higher revenue, but at the same time do not punish the consumers in terms of paying higher costs for water. So I think best is to wait for any potential TSM development from the government over the next coming months. Second question looks interesting. Are we right to assume that the WSIA and regulator has many shortcomings in asserting their legal authority to have a transparent tariff setting process as permitted by law, and instead of going back to state government, which legally speaking has no say on this matter? This is unfair to operators who had migrated to the asset-light model. Yes, it is.
You see the question, the first question. Can you press the answer live so that the audience can see the question?
Oh,
okay. Press answer live.
Okay.
And then number two also, you have answered the first one, right?
Yeah.
Yes, now press number two. Yes, so the audience can see the question. Okay, so now you can answer the second.
I'm going number two. Apologies for the technical issue.
No problem.
I did not press answer live. So the second question here is that, are we right to assume that WSIA and regulator has many shortcomings in asserting their legal authority to have a transparent tariff setting process as permitted by law, and instead of going back to state government, which legally speaking has no say on this matter? This is unfair to operators who had migrated to the asset-light model. Yeah, this question is rather sensitive, but I'd like to answer yes, as it being unfair to operators who had migrated to the asset-light model. But the compensating factor here, as I understand, is that for state operators that have migrated to the licensing model, should there not be a tariff hike approved for the water operator in specific operating period, the compensating factor is probably allowing for a lesser lease payment required for the state to allow them to not make so much losses until the next tariff hike is approved. And the other part of the questions, I think, let's leave it to the politicians to address. Okay, oh, there's 4 questions now. Putting aside the asset-light model, do you think water Capex are still bankable from private investment or for private investment if the tariff issues are tied to the investment agreement? Yes, if tariff issues or tariff quantum required is tied to the investment agreement, then it would be a sort of a backing to the entire proposal for the private sector to participate. Yes, it would. Yeah, but we do not know what would be the actual components of the TSM that the government is looking at. Okay. Okay, I'm answering live a question. I'm sorry, I did not mention. I think some of the questions were, the previous question on whether it's unfair to water operators was from John Leong. Thanks, John. The next question is from Mr. Loganathan. Okay, the question goes, in your view, do you think the changes in government in 2020 had resulted in approved budgets in 2019 for water-related projects not being spent? Yes. I think there was some backlog in water spending that was supposed to be rolled out this year, but there was a bottleneck situation because of the transition in government. So typically, okay, government transition typically has several effects to the rollout of projects. We've seen this in 2018 elections. We saw this in we saw this in 2008 elections. We saw this quite recently, not so far away, in 2018 election, where some of the big large-scale projects were deferred or cancelled. And because of the transition in government, certain projects approved earlier by the previous will need to be reviewed and approved again for rollout by the new government. So yes, I think there is some form of bottleneck in terms of project rollout. Especially, you have to consider the fact that the impact of COVID-19 and the onset of MCO since March this year have also resulted to a slowdown in government approvals, tenders, and also construction contracts, for example, that were halted during the peak of the MCO period. So now we have this question from Dato Muhammad Yusuf Muhammad Isa. Thanks for your question, Dato. So your question goes, going forward, do you foresee the possibility of private financial institutions to be involved in giving direct funding to operators for future Capex, bearing in mind that the terms and conditions as set by SPAN for Capex financing? Yes, I think if the project is sizable enough and the returns to the project is lucrative enough, I don't believe PFIs would avoid the potential positive investment returns from it. But sorry, yes. I think I forgot to press live again. So yeah, this is the question from Dato Muhammad Yusuf. So the question was that, going forward, do you foresee the possibility of private financial institutions to be involved in giving direct funding to operators, bearing in mind the terms and conditions set by SPAN for Capex financing? In my personal view, I think funding for water Capex at least in the first 2 or 3 operating periods of each water operator that has migrated, would still be tightly regulated and governed and decided upon by SPAN and PAAP. In my opinion, PAAP has a backlog of water capex plan that they are not able to execute, as they had raised some form of funding to help execute the acquisition of Splash by the state government, I think about 1 or 2 years ago. So with the potential, if there is a TSM mechanism framework rolled out, then I believe the immediate funding venue for the water sector will still come from from those approved by SPAN and funded by PAAP. Okay, we have a question from Man Wah Wong. Thank you, Man, for the question. And I think this is a simple question, which is, has a TSM framework in Malaysia been approved? The answer is no, not yet. And so far, if you follow the news flow by some politicians, it does indicate to me and to some of the industry players that a consideration to roll out a TSM in the short term may not be a feasible idea at this juncture, given the political consideration faced by certain parties in the government. Thank you, Mike. There is an anonymous attendee asking a rather crystal ball question. When do you foresee that the tariff will increase? Like I said earlier, this continues to be the million-dollar question. If ideally there could have been some form of water tariff increase in 2019, as the TSM was supposed to be finalized and laid out to water operators that year, and that did not happen. And at this juncture, it would be difficult for me to indicate when do I think tariff will increase. If you ask the water operators, frankly, yeah, tariff increase should have been done yesterday. So this next question, also from an anonymous attendee, what is, in your opinion, Malaysian willing to pay more for non-basic thing like mobile phone top-up, fast food and water from the water kiosk, which is more expensive than water from water operator? But the problem is only politician. Yes, I think I agree. I think the politician is not the problem. I think politics and the issues involved and the political issues or consideration involved in raising the cost of living for some people, may not all. The B40, for example, is an acceptable consideration by the government or the politician to decide on whether or not it is a good time to raise water tariff, on whether some people afford to spend on mobile phone top-up, fast food, or water from the water kiosk. I think it's more of a personal matter, and I don't think I should comment anymore on that. Thanks. Okay, next question. I think this is the second last question, or the last question. Wait, I lost the question. Okay, so this is the question. What are the challenges that a water industry player might face? This is also anonymous attendee. What are the challenges that a water industry player might face when migrating from concession-based model to asset-light model? It's the ability to be granted the tariff hike as proposed in the licensing agreement, which they have secured from PAAP or SPAN over a 3-year period. I think that would probably be the challenges, apart from achieving the KPIs set aside or set out by SPAN. On the KPI set out by SPAN, the KPIs are a long list, but to summarize, they include the quality of water distribution, NRW, complaints, water loss, and so on and so forth. And the next challenge is to actually be given the agreed tariff hike as proposed at the end of every operating period. But I think also the audience may want to know that in the licensing agreement or terms that was executed for states that have migrated to the licensing regime, if you look at the accounts of PBA holdings in Penang or Ranhill in Johor, which is a listed company with publicly available numbers, you could see that there is a stable profit margin sort of being given to the water operators during every operating period. So as per my understanding, every operating period with the tariff hike, those water players would typically benefit from a between 8 to 9% net margin every year, provided that they comply with the KPI set by SPAN. So simplistically speaking, that would be the operating landscape for every water operator at every operating period. Okay, so I think that would be the only, will be the list of questions which I think is relevant for me to answer or address at this juncture. I think the main question of the day after this presentation is on water tariff hikes, and I think that would be a key thing to monitor over the coming months on whether or not that would be a thing for the sector in terms of drivers going forward.
Thank you so much. Thank you so much, Shari-san.
You're welcome.
So we'd like to announce our next webinar. So do join us next Tuesday at the same time at 3 o'clock. And we'll be welcoming Dato Engineer Alice Jawan, Permanent Secretary of the Ministry of Utilities, Sarawak. And her topic is Leaving No One Behind, Expanding Clean Water Supplies to Rural Population in Sarawak. Oh yes, and by the way, next week, this will be our last seminar in this webinar series. So don't forget to join us. And the next announcement would be, yes, so the Malaysian International Water Convention will be back next year. It's a biannual event. It happened in 2019. So the next one will be next year. So do pencil in the dates and join us next year. So to all our attendees, for all the updates on our webinars and the videos that you would like to watch again on YouTube, just follow us on our Facebook. So all the links will be provided there, including today's session, which is currently live on YouTube, and you can watch it again and again. Okay, so thank you very much to the Malaysian Water Association for hosting today's webinar. Thank you, Dr. Kade, for giving us the welcome address. Most of all, Encik Sharizan, thank you so much for all the time that you have put in to prepare for today's presentation. I know many people have asked for the slides and so on. So we will come back to you, attendees, about the slides. So thank you everyone for joining us this afternoon.
Thank you, Denise.
Thank you, Sharizan.
And also MWA for allowing me to share our findings on the water sector.
Thank you very much.
Thank you, Mr. Lee. Thank you, everyone.
Thank you, everyone.
So thank you to all our attendees for joining us this afternoon. Wishing everyone a great week ahead. And I'll see you again next Tuesday at 3 o'clock for our very last webinar. Thank you very much and goodbye.
Bye.
Bye-bye. Bye-bye, everyone. Thank you. Thank you.